Greetings everyone, welcome aboard. Happy Wednesday to you guys. Hump Day here, January 26, 2011. We had a great FOMC day in our live trade room today, guys. What happened this morning? Well, again, if you joined us this morning, Wednesday morning, today was Fed Day, right? Or the Federal Open Market Committee, right? Now, they began their meeting yesterday, right? So yesterday morning, right, this committee of ours, right, they started their meeting yesterday, and today they announced their decision, right? Rates were unchanged today, but they announced their decision at 2:15, and they leave us notes about monetary policy. They change the Fed funds rate, right? So there's a lot of stuff they talk about during this meeting. Now, we're actually going to get the notes of this meeting. The Fed notes are published next week. So we have the meeting began yesterday. The meeting ends on Wednesday, today, and at the end of that meeting, right, they announce, right, to all of us if they've made any important decisions, such as the Fed funds rate, right? Today it was left unchanged, right? They make comments such as, obviously inflation, jobs, housing, right? So they're always talking about everything that, of course, that shakes up these markets. So FOMC day, right? This is known as kind of a holiday for day traders because it's a very special day. We get a lot of volume early in the day. But we always have to make sure we know exactly how to treat this day properly, because it tends to be on a Wednesday. Wednesdays have crude inventories, so today could really be a bad day, right? This could have really been a nasty day today. If you don't know how to trade FOMC day, you're going to be standing right in front of a freight train as it's barreling down the tracks. All right, easy way to really get yourself in trouble is to not pay attention on FOMC day. FOMC day is pretty simple, all right? It's qualified by lots of early volume, but then because the traders have to leave early, get their lunch, and then come back for 2:15, we see the morning session end about 45 minutes early. So normally we'll be trading until about 11:45, 12 o'clock, sometimes 12:30. Today, though, again, early volume, but we got to make sure we're aware at about 10:45, 11 o'clock, we're going to start seeing this thing go quiet, all right? And what happens is, it's really quite simple. What happens is the announcement's at 2:15, which means put yourself in a major money manager position, right? If I'm a major money manager, I'm going to run across the street to the Olive Garden, right, and get myself some endless pasta, okay, ahead of the 2:15 news. That way I can get my lunch out of the way, right, because I'm a day trader. I gotta stay nourished, right? I want to get my lunch out of the way, get back in time so I can look at my chart, be ready to pull the trigger at 2:15. So that's literally why the markets end early on FOMC day. It's as simple as people needing to go to lunch early so they can come back earlier. Now again, we knew this, and we of course adjusted our trading strategy accordingly today. Now we had one more wrinkle: crude oil. Right? Crude oil. Now today, right, we had crude being rude today, right? We always joke around by saying sometimes crude's a little rude to us on Wednesdays because Wednesdays are inventory days. Now, as you can imagine, the crude futures market is really going to be waiting for crude oil inventory news. All right? Now, we talked about this morning. We posted our morning prep on our blog. Did you guys see the blog this morning? And we nailed it, guys. We did a great job on the morning prep today because we were ready for what this day had in store. We knew about FOMC day. We knew that crude inventories were at 10:30 this morning, so we were watching crude closely. We were making sure to get in, right, get out early for FOMC day. On the gold and the crude, we had pretty much the same type of situation. We found ourselves at the highs of a sideways range. I'm going to sell the highs on gold. We took wave patterns coming down. Now see, here's where we really get a chance to see the power of the dollar today. Now, what did the dollar look like? Dollar was flat. Flat dollar. If I see gold dropping, am I going to sell the lows with a flat dollar? No, right? No. I'll wait for the lows to be broken and I'll sell retracements. So we're going to take a look at the dollar in a moment here, guys. The dollar flat this morning makes perfect sense ahead of the FOMC announcement. I wouldn't expect the dollar to be doing much ahead of this big news announcement, 2:15. So we see the dollar going sideways. Sideways dollar, guys. We know what that means, right? Sideways dollar, I'm not going to sell the lows. I'm not going to buy the highs. I'll buy a pullback. I'll sell a retracement, right? That's going to be the higher percentage opportunity. So the dollar gave us a clear heads up. We used wave patterns on the gold, selling the highs. We used wave patterns on the crude, selling the highs. And then I had a last right? The last trade of the morning today, trying to capitalize on the 10:30 news, but no volume was there to be found, right? So after 10:30 news, I tried one more time to short the crude. We had the right direction. You'll see what I'm talking about, but it was very slow. Now, what did we learn today, though? If you could sum everything up, what would you say we learned today? Well, we talked about this a couple times this morning. FOMC day, I want to get twice as much confirmation to get me in, and I only need half as much to get me out. One more time. FOMC day means, or really guys, anytime you have a real slow, sluggish, and sideways dollar, right? That's going to mean everything else is going to be slow and sluggish. But today, FOMC day, I want to see double confirmation. I want to make sure everything is perfect. Give me some more feedback to give me the confidence to get into this trade. So I want twice as much to get in, but then I'm going to take my profit early because we're seeing these choppy, right, back and forth markets. We're not seeing trending environments. We're seeing sideways chop and slop. So to trade sideways markets, at especially like a market we saw this morning where we're not expecting those final targets to get filled, give me any reason to take that profit and I'll get my money and run. So I'm looking for double confirmation. I want twice as much to get me into a trade. And I don't want to get, I'm not going to hold that trade nearly as long. I'm going to find that next support level, that next resistance level for a long trade and take that money and run, right? Let somebody else wait around all day to wait for the FOMC day. I'm going to take my money to the bank and lock it up. So twice as much to get in, half as much to get out. That really is kind of the underlying theme of trading FOMC day. Now, as you can see, right, and this is a pleasant surprise, we had a great day today. Now looking back at my notes, though, I realized this morning, I take notes every day we trade FOMC day, and looking back at my notes, if you guys recall, we've had a pretty good FOMC day here for quite a while. We always seem to find ourselves in a position where we can capitalize on FOMC.